Afternoon. Happy Friday. This is Sean LaBelle of the Dekker Hewett Group. It was a positive week here for all North American benchmarks, despite the fact that there was nothing really newsworthy to move markets higher. Things had simply just been a little bit too oversold. There was also the notion that we might really have seen inflation peak. I know we've been talking about this quite extensively in recent months, but you're really seeing it here in the commodities market in terms of trading right now. All major commodities have sold off quite aggressively, especially in the month of June. Most of these now are actually in the red on the year. You just have to look at steel, aluminum, copper, and even oil is sold off around 25% from its highs in a very short period of time. So obviously, this just speaks to the inflationary environment rolling over, and what that means is that the U.S. Federal Reserve and other central banks around the world don't necessarily have to be as aggressive in terms of combating inflation. We're really going to want to see that inflationary number, though, roll over before these central banks become a little bit more dovish in terms of those interest rate hikes. So that hasn't done anything yet just to change in terms of the forward expectations for these interest rate hikes, but it is an encouraging signal. In terms of this week's Market Watch Weekly, it just talks a little bit about that inflationary environment. It's going to be a bit of a summary of last week's Market Watch Weekly, but a little bit longer because this one is our Q2 recap. So it just discusses what we've seen so far this year and what to expect in the balance of the year. It's going to be a lot of stuff that you've already read before in terms of supply chains easing and the inflationary environment sort of rolling over. This remains a reason why we are so constructive on the market. And there was some interesting data that came out on Friday in terms of U.S. labor market. It was once again a big U.S. jobs beat, which doesn't speak to an economy that is slowing down. It is a lagging indicator, but nonetheless, we're still seeing very strong labor recordings coming out of the United States. That's not normal for any sort of a recessionary environment. It just speaks to the strength of this economy. So we encourage you guys to have a read of this week's Market Watch Weekly. We'll end it there. Hope you guys enjoy the weekend, and we will talk to you again next week. Cheers.